Michael, do you understand this question? Can you help? I'm just trying to interpret it. I'm still trying to understand it, but if maybe you understand it better.
Well, the only thing I heard that was a question was that how do we use a suspension block? And I'm sorry, yeah, suspension block. And it's basically treated the same way as any old inefficiency, like a SIBI or a BISI. If it's bullish, okay, you're going to use the upper half and watch price respect it. If it's bearish, you're going to watch the lower half and it should respect it. So I didn't catch anything else because I was trying to get Twitter to let me in here to hear everybody. That was the
All
only
right,
thing I
all right.
heard was how to use the suspension block.
I will make it simple. Uh, Sir Michael, when a price rally, let's say today we were bearish on NQ, all right, like the liquidity 24,892 was the terminus, right? And for that price run we have to find PDRAs. Which PDRA and that will be formed first in that leg and get respected. So we our eyes see us that this one respected, and the second one should be this one. The third one should be this one, like order block, then fair value gap, then breakaway gap, then measuring gap. Like, uh,
Did you
am I
watch my video from today?
for today? No, I didn't. I'm sorry. I was. I'm still
It's
in my
all
car. I'm
it's in
driving.
the. I already did that
Yeah,
today.
Hamoudi, he literally, that's why we're here, is him literally just providing the answer to your question, which is a great
All
question.
right then.
Hey, high five. It's a good question. It's almost as if he knew you had this question before he created content.
Yeah, that's amazing. Actually, I didn't saw the video. I'm driving, and here situation is very bad all over the missiles and helicopters. And
Sorry,
I'm not
man. My
getting.
time machine got me here late. I had to come back to present time.
Okay, Hamoudi. So
Thank you,
you
sir.
got a video to watch, and it's very, very topical with what your question was. So good job. Great job.
Thank you. And, and another question, if I have a chance to ask.
Yes,
Sorry.
please jump in. No problem.
All right. All right. The quadrant levels and the other like I am a student of 2024 mentorship, which Michael told us 25%, 50%, and 75%, and now there is the another Fibonacci levels. Should I apply that, or it's not? I should stay with the old one.
If you want to have a better, closer read on continuous order flow, seeing that if price continuously uses these levels and if it's bullish and it fails to touch them but still goes higher, that's indicating strength. Reverse it for when it's bearish. So when you have the octant levels in there in between the quarter, midpoint, lower quarter, that's enough. But having the smaller levels in between them just gives you a greater detail for reading continuous order flow. You don't need to go on the candlesticks and look at numbers of how many people bought or sold. You're getting a visual representation of ongoing buying and selling.
All right, all right. Thank you. Well, anyway, thank you so much. I love you, Michael, and I love you, Kit. Thank you, sir.
Thank you, brother.
Yay. Hey, he's talking about really fractalizing the market, boys and girls, adding these lines to it. You go with the quarters and then the eighths. And if you can keep breaking them down, you're fractalizing this order flow, all of the things you learn. It's kind of exciting seeing it. Venom,
So how you doing,
I'm
Kit?
doing fantastic, sir. I'm doing very good. Good, great.
How's your day going? Everything well?
Yeah, no, I mean, kind of yucky weather going on right now, and Ohio.
You get any storms?
Yeah, it's kind of really nasty actually in Ohio right now, and like I'm staring in some farmland, and it's like been pretty much a gray, overcast, nasty day all day,
Mm.
and yeah, it's just kind of yucky. It's kind of reminded me of like the morning session. It's just like yucky. But I mean, and I don't know. I kind of like, and I refer to this because of myself. But like when people rush into the market too quick, what happens? They get slaughtered. Who else gets slaughtered? Pigs get slaughtered. You kind of have these days where folks go running in, wanting, expecting things without having the proper connotation, context. And I mean, the way you line things up, Michael, I mean, you really, really help folks understand how to, again, you're creating a matrix and folks need to align where and how price is doing what it's doing within this matrix. And I mean, I think the class today was a master class. I thought it was beautiful. The way you were hopping up and down on social media, like, yeah, boy. But I mean, it's like you had the high and the low, and that's like, whoa. And when you
Yeah.
look at that precision, and then when you see what that is, what you can do, how little drawdown, how it was things that were lined up and anticipated within the grid, it was all within the realm of understanding, the realm of possibility. And yeah, to me, it was just beautiful. It doesn't get any clearer for the student who's following to kind of at least see the real life application of what we talk about here in Trader Roundup, and you know what the market's doing when it's doing what it's doing on the charts. So seeing it after the fact, but being able to talk about it as if it were within foresight or that ability to predict, again, as you said yesterday. I mean, there are huge hedge fund managers and billion-dollar corporations and all of these things that are spending all this money trying to figure this stuff out. And the candles
Or
kind of show
paying for inside
themselves.
information. They're paying for inside information, trying to
Yeah.
get in sync with something that, you know, I tell you, like I said it the last time we were here together, it's like when you really understand what's in your hands, what you're learning, literally, it literally is what everybody else on this planet wants to know. They all want to know this, and they spend fortunes. They break the law to get it. Senators break the law just to trade with inside information, and they all turn their heads pretending it ain't happening now, just so they can enrich themselves. And here it is, being shared for free on the internet. Some old guy. I don't know. I don't know where he came from. Yeah, I don't know what his deal is, but he's just got this thing that he just wants to share it. And you know, this year is just basically MythBusters. Okay, I got a long list of things that people said he can't do this, he can't do that, he can't do this, he won't do that. We're going through all of them. Okay, and things that I taught, I'm showing you that they're absolutely applicable. I'm showing you that you can start from the lowest degree of leverage. So that way there's no ego there. There's no reason to be fearful. And anybody can start. Anyone. I mean, think about how much it costs to hold a micro contract. It's next to nothing. Less than $100 if you trade through AMP, and I'm not repping AMP. But think about that. That's wild. And you can build that up over time if you take your time. Anyway, I'm having a lot of fun this year.
I think everyone's having a lot of fun this year,
Yeah.
Michael. I mean, you are revealing and exposing just a level of information, of depth, of knowledge. I mean, we're in this. It's like there's this. I don't know. The world is what the world is, and there's this kind of level of sense of urgency of what it is. But we get to be here and do what we do, and get to radiate and send like just positive energy to folks, right?
Yep.
Help them really empower themselves with good, solid information. And I love that we can just come here and stand on that. And
Yep.
that's all we're here to do is really help people empower themselves with this information that's been your life's work. And I just feel so privileged and proud that I get to stand beside you with you, and we get to talk to so many folks that to get to come up, and their aspirations have been to talk and ask questions. And I love it, brother. I just really, really do, from the bottom of my heart. Like, and I know the community feels the same way, but like the engagement this year, the back and forth, like it's just wonderful, bro. It really is.
Yeah. I love it that we're all down to earth. We're all, nobody's trying to be better than. I don't have to,
Nope.
talk down to anybody. We're all the same here, just hanging out. And I want to see you all do well. And if you have questions that I can help you with, then I'm here for it.
And I love that it's just getting more organized and more powerful. Like we can bring one person up at a time. It can be you and I. We can have a conversation. We can work with them. You can work with them. I can kind of help mediate, sometimes we just get some stuff and we don't know what's going on. So
Yeah.
You know, I mean, that's kind of the fun part, but that's a challenge. But that's why we're here. That's why we do it. 5:50. I like the time. I like the macro. Boy.
Kit, I'm sorry. A quick question, if I can get a chance. Last one, please.
Sure, buddy. I know you've been excited. You're all over the DMs, so I know you're very, very happy, and you have a long list of questions. So I don't mind.
Thank you. Okay, Michael, as a 30-year experience as a trader, okay, you start your journey with the orange contracts, then you come to forex, and then I guess commodities or whatever, so on. Now you are in indices futures because they are more professional, right? For I'm your student from 4 years. I studied 2016, 17, and 22, 23, 24. In this environment now, right now, I am familiar with NQ because most of the time I study from your lectures in NQ with the diversion with ES, and the second pair for me I sometimes choose gold. Okay, but now in these environments like this war scenario on everything on, should we watch the crude oil and take risk there for a bit because that market is liquid? What do you think of that?
I uh, I have to be very, very careful in what I say about these types of markets. That's why I backpedaled from silver and gold because I knew the volatility was going to start hurting people. Calling it up there was easy, but now we're in that part where if you don't know what you're doing and if you're not really careful about what you're risking, keeping the risk very, very small, you can hurt yourself. So that's why I basically say next to nothing about those markets. And now crude oil has entered that same realm where it's you can touch it if you want to. You can risk it. You can do all those things, but you're not going to be able to say ICT told me no. You did that all on your own. So I told you we would probably see a run up in crude oil. It popped up there. I told you to take some profits, and the whole thing came right back on down. What's actually happening is a lot of governments in countries that have reserve oil, they're just basically dumping on the marketplace, and that's only a short-term fix. And the longer this goes on, the more eventually what's going to happen is we're going to see crude oil and energy prices go up. I'm not bearish on crude oil. I'm not buying crude oil. I'm not trading crude oil. So that way, I'm not telling you, copy me. I'm not saying I'm going to come back later on and say, look how much money, and here's my executions in crude oil. I said I wasn't going to be trading silver. I wasn't going to be trading gold, and I'm not now trading crude oil. So those moves, in my opinion, are done in terms of where the safety entry was. Now we're not safe. We're in elevated volatility. So to answer your question, I went around a long way, but I'm telling you, I would not be touching it, especially if you're not experienced well or well capitalized.
So I just want to add to what Michael is saying. I mean, folks, you got to understand this is all education. We're trying to help you learn and understand the markets, right? Like where and how. I mean, certain markets are going to be exposed to a level of volatility that it's just not going to be safe to be in. And you, as a trader, especially as a novice trader within this education of what you're trying to learn, the last thing you need to do is be applying yourself to this volatility. Now, if you're learning from an education standpoint, that's one thing. But I mean, there's no way that you're looking at engaging these markets in any other way than just simply learning how they operate and how they flow, right?
Said it another way, I understand that the excitement of seeing these moves and how fast they're moving, it comes natural to us to want to chase after that and be a part of it because that's where the big moves are going to happen. But that's where the big pain comes too. If you're wrong, it's unforgiving. Like you have next to no chance if something reprices quickly. Boom. Let me paint an illustration for you. Okay. Let's assume for a moment that you are in crude oil. You're in crude oil, and we've dropped down a little bit. You might think, well, it looks like there's some relative equal lows there. Let me get short there. And all of a sudden, Israel drops a tactical nuke. Everybody's going to go crazy, and they're going to rip that crude oil market straight up, and it can waste you quickly. We just watched 20 some $1,000 in less than 24 hours transition from going up and back down easily. Could you afford 20 some thousand dollars in one fell swoop against you? Chances are you probably can't. And most people today, they want to over leverage and they want to make, several contracts on their trade. It's just the responsible person in me is trying to be reasonable as an educator and keeping you as a student grounded. And it's not to hold you back, it's to protect you because it's too easy to blow up. Everything right now is a ticking bomb. And you have to be careful. Like you have to be careful. And as soon as you get a winning trade or two, you start thinking, well, these micros, I'm doing okay with it. It's working, but you know, I want to make some money. Let me just go in here and just do 3 minis because my account says I can do it. And then you hurt yourself. And then you feel bad. You want to hurt and fix it. And then you end up making it worse. So to avoid that, don't do those things. And to avoid meltdown or blowing your accounts, don't trade these high volatile markets right now. Don't do it. Paper trade them, demo trade them, where it can't hurt you, or tape read them. But telling me that should we trade these markets? No. There you go. There's your answer.
There it is. I love it. Guys, you should be practicing if you want to practice in gold. You want to tape read gold. You want to tape read oil. That's it right there. You can tape read all you like and apply the concepts and be looking at where and how in the future this is going to be a market that you envision yourself trading. If you yourself as a trader resonate with oil, then back test it, then forward test it, then paper trade it, then apply the concepts that you're learning, that you're accompanying, just as we've had students come on before and say that they want to apply their own logic to the chart while accompanying Michael in his analysis. You can pick another chart and do that. And that's a great idea, right? Right, ICT? I mean, folks can
Yeah.
do that. But the idea of actually deploying capital in these markets in this education process that you're in, absolutely not. There's no one that should be looking at engaging in the volatility that's occurring within this global condition. You're here to learn, and we're all here in a very safe environment in which we can talk about education, not investment advice. So even as you word that, Hamudi, do you see what I'm saying? And everyone else who's listening, do you hear what I'm saying?
Yes, sir. Yes, sir.
It's really indicative that you frame this in the correct vocabulary. And I understand, not with English not being your first language, where, how, and why. And we are very loving and patient for that. So we understand. We do. But we also want you guys to really, really understand it's indicative that you are paper trading and that you are applying these concepts to a back test and a forward test on whatever market you like. Michael will be trading and showing you what's happening algorithmically on NQ. If you like something else, whatever that is, then applying the ICT concepts to the chart that you like is just preparing you to be the trader that you want to be, and that's encouraged.
Training in this environment, while things are elevated in terms of difficulty, risk, and volatility, you have no idea the investment you're making right now without making real monetary risk behind the trade ideas. When you go back to a more relaxed market condition, it's going to feel like you've been doing it way longer than you really have because it's going to seem like something's gotten better, something's easier because the market's going to be a whole lot more liquid, a lot more loose, a little free, fluid. And right now, we're not seeing that. Like you got to be really nimble. You got to know what you're looking for. You got to know when you're going to get out, how you're going to move your stop loss, because you can get snatched up real quick and you're done.
Yes, I understand that. Like if you see gold or whatever, 1 minute candle is moving like $10, $20, 100, 200 pips. It's really risky. And my point was that we should take advantage of this opportunity, the war scenario and the crude oil. So the answer is no. I understand. Thank you, sir.
Good job,
You're quite
Hamudi.
welcome.
Yeah, good job, buddy. Let's get someone else up here. Let's get back to the lecture. I'm looking to see. I mean, Lundo, I know you're not requesting to speak. Breezy, I know you're not requesting to speak. Tyler, I know there's a few folks here who are not requesting to speak, but I would value and appreciate your thoughts. Lundo is shy and is not. He's not coming up here because he's shy, but I'd like for some folks to work on some of that because they really have aspirations to talk with you, Michael. And I like how I just know some folks are very shy. So, and if they're not like ready and if it feels like I'm putting them on the spot, then it's like even less like, I can't believe I was in the middle of doing this when you said my name. So,
Yeah.
anyway, we'll get some people up here. We got Spectral MTB. I think a mountain biker, I believe. You there, Spectral?
Hey, yes, sir. Can you hear me okay?
Yes, sir. You know the protocol.
Yes, sir. So I am in my 40s, I'll say that. Been trading for about 3 years, mainly using inversion fair value gaps, looking for hourly sweeps, 4 hour sweeps, London or Asia session high low sweeps into the opposite side, entry with, again, an inversion fair value gap. So that's kind of my profile, what I like to do. So just for Michael, just want to say the lectures so far this year I've been more engaged in, have been more enjoying. They've been really, I don't know why they're just clicking for me more. They're just that they've been really good. So I just want to mention that. I've just been like locked in. I'm not sure why. They've just been working better for me.
Saucy, for those of us that know why. Saucy would be another way of putting it, Michael.
Saucy.
Yeah, saucy, bro. Like you're talking like a lot of work to get like this like bit of information that is just free flowing so willingly
There
for
you go.
you. And I don't know why it
Exactly.
just works. It's just unbelievable. Yeah, that's called sauce, my friend.
Good sauce, brother. Good sauce. Love it. But so my question is, and I pinged this on X, so sorry if you're seeing it twice, but you're obviously focusing on opening range gaps heavily and not focusing so much on new week opening gaps, end dogs or end wogs, right? And
Mhm.
I see that they're overlapping a lot, like specifically the one from last Thursday to Friday is overlapping with that, I think that week's new week opening gap almost to the point where the quadrants or eights would line up almost exactly. So I'm just curious when you have that sort of situation where one is overlapping the other, how are you supposed to deal with that? Which one is more important? Which one should be your focus?
Well, whenever you have nesting PD arrays,
Mhm.
it provides significant increases in the strength or validity behind the ideas you're implementing. So if that NWOG, if we traded above it and now things become bearish, once it trades down below it, what do you think is going to happen when you trade up into it? It's going to act as a premium array, right? Well, if you have a
Correct.
nesting of NDOG and NWOGs, and maybe even sometimes you'll have the regular trading hours opening range gap in there too. As soon as it gets into that area, it's like it's going to have a lot of momentum. It's going to move. It's going to have a lot of energy when it leaves. When it leaves, it won't generally go back into it a lot. It'll just, okay, I have enough. It just starts to send the market away. So that's really the only importance that I place on it. Like there's no other secret to it other than that the more behind that idea and the grouping that PD arrays show and shared in an
Mhm.
area or range, once price gets in it, anticipate a lot of fireworks.
Gotcha. Okay. And if they're roughly like on top of each other, like the opening range gap high and low is almost the same as the new week opening gap high and low. Is there one you would prefer to pay attention to more than the other, like the opening range gap, if it's like today's
I'm
gap
going to
or
use,
yeah,
yeah, I would, if there's an opening range gap, regular trading hours opening range gap, I would look for those levels and I would be monitoring them and just looking at the overall nesting aspect as, okay, we're going to have a lot of movement. And I would just keep my focus on the regular trading hours opening range gap because those levels are most right now, they're I don't want to say fresh, okay, but they're the most impactful because they've yet to be utilized. Whereas perhaps the previous NDOG or NWOG may have already had its soiree through price action being using as premium discount arrays and traded off of them. But these levels, once we have a regular trading hours opening range gap, they're virgin, like they haven't been touched at all, and
Mhm.
that's where my focus is going to be primarily.
Nice. Awesome. Thank you. Have you been kind of ignoring, for teaching purposes, the NWOGs just for the sake of clarity so that you can focus
I
on
had a
the.
lot. I had a
Yeah.
lot of questions over the holiday. If I could teach more about it, what things could I teach in it, in kind of like a advanced perspective, or how to use them with consistency? Like, what do we do with this, and what do we do with that? And just because it fills the gap, does it do anything for us? Do we throw it away, discard it? And how many uh, regular trading hours, opening range gaps should I keep on my chart? And
Mhm.
I'm actually applying all that stuff. So I had I have so many questions came to me over the holiday season, and it was predominantly around this particular thing. So that's the reason why I'm dogpiling on it and spending a lot of time on it.
Got it. Perfect. All right. Thank you, Mike. I appreciate it. Thanks for your
You're very
time.
welcome.
I love it. Thank you, Spectral. Next up, we'll bring JCFX 21. I got Lundo here? Wait, Lundo. Lundo, hey, London, long time follower, first time talker. Yeah, Lundo. I can't hear you, buddy.
Let's get it, brother.
Can you hear him?
I don't hear anything but you.
Jeez, Luis. All right, Lundo, you can drop down, come back up, maybe power down, power up. That's the tech secret here at Trader Roundup. So, JCFX,
Hey, hey, how's it going, guys?
pretty good.
Hey.
You can hear us okay? Yeah.
Yep, hear you perfectly. Yeah, so I'll just get started. I'm 26 years old. I'm from Naples, Florida, and I actually started trading in 2018 and did all the retail trading for. I think I wasted. I didn't. I don't. I wouldn't say I wasted 2 years of my life, but retail trading is what I was introduced to with IML. I don't know if you guys have heard of that.
Oh yeah, we know. Yeah,
Yeah.
is the Pope Catholic? Bear shit in the woods?
Yeah.
Yeah, we've heard of IML.
Yeah, they ripped my shit off for a long time.
Yeah, I know they did, and I was that's how I got introduced to it,
I know. I
and
get it.
it was actually crazy because I actually prayed about trading. I would pray to God. I was like, God, give me something that I can make money in my own time, not have a boss. I remember praying for that, and in college, this kid was like presenting what do you want to do with his life. He's like, I want to be a forex millionaire. So I was like, all right, what is this all about? So the rest is history. 2018, I did 2 years of that. And then in 2020, I actually got your mentorship in like underground, like from like a flash drive or like this website.
Yeah,
And
everybody got it.
yeah, I had no idea you had an ongoing mentorship. I was like, oh, like what is this? Institutional trading? Like, and I remember somehow you got pretty upset about it and you somehow like deleted the link and I lost it like for like a good 6 months. I lost it. Do you remember that, Michael?
I know I had my team taking down a lot of the piracy links through Google Drive, and they were doing it all over the place. And I was taking down Telegram channels too. But it got to the point where it's just so many. If I take down 20 of them in one day, 50 of them will be up the following day. And I was just like, fuck it. I'm just going to let them advertise for me. And then there you go. I got 2 million people now.
Yeah, so you took one of the ones I had down, and I was like, "Oh, I'm screwed. Like, what do I do now?" So I like stopped trading for a bit, and then yeah, my friend was like, "Hey, like he has a mentorship," so I ended up joining your mentorship in 2021, and
Oh,
from
so
there on,
you're a paid student then.
yeah, I'm a paid student.
Okay, I got you. So you went
Yeah.
the piracy route first, and then you're like, fuck it, I'm just going to join it for real then.
Well, I didn't even know you had a like ongoing mentorship. I thought it was just piracy. And
You
then
thought
someone
it
was
was
like, "Yeah,
just
he has."
piracy. That's how relevant it was.
I swear, it was so underground. I was like, "Dude, what is this?" Like, it felt like I
Yeah.
was,
I
you
mean,
know,
I found ICT Underground too. I told him that it was. I mean, like,
Yeah.
I mean, he was just real. He was very much an underground thing.
yeah, exactly. And then yeah, so I actually got to join the mentorship, and I was like, "All right, here we go." Now it all, I got serious. I did the mentorship. I did all. I went through the whole process. So I'm alumni. I'm in the chats and everything, and pretty much, yeah. Thanks to you, Michael, I actually got funded by Top Step,
Very
and
good.
I've been trading with them for honestly just got funded. It took me a while. You know how you say, it took you what 6 years? You've talked about it before to like become consistent and profitable. It's just taken me a while. I just became profitable January.
How do you engage with
Building
price,
my
bro?
okay.
You kind of
So pretty
bypass the
much
protocol, so we're already getting an
my
idea here. No, I'm just
my
kidding.
apologies. All right,
It's
so
all
I'll
good.
continue. So I mean, pretty much, I use like I when I first open the chart, I have all the charts up daily, monthly, weekly. I actually annotate the midnight opens. I annotate the new week and new day opening gaps. And heavily use the first presented fair value gap, 9:30 opening. That's when I trade is the New York or lunch. So pretty much, I look for a power of three. I'm a pretty simple guy.
So
I,
real quick, you use a power three and you highlight the true day open, right? Within your intraday
yeah,
profile of trading ICT. How
yeah.
important is the intraday true day close within your profiling? Just curious. Because one thing I never hear anyone ever talk about is the true day close within the profiling of IPTA and where and how everyone loves to talk about midnight.
Yeah. I mean, I just annotated on my chart and pretty much like I've back tested it many times where, price tends to react off of, the true day openings.
Oh, no doubt. No, I
So
love it. I just was
yeah.
wondering, do you even know what the true day close is?
What is it?
Ha 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 ha. It's 1500 episode 4 core content month 8. Okay.
Okay, perfect. Yeah. So I mean that's just pretty much what I do. And I mean I kind of want to go on like what's something I've been having trouble with recently. I know a lot of traders have been having this like today, for example. I was trading the market and I was going short. I was like, man, those lows look too clean. I was like, there's no way like we're gonna leave these, lows for a while, open. But of course, that's what the market tends to do. So I ended up going short today at like around 9:40 because it actually did align to my midnight open the true day. So I went short and then I got stopped
Mm.
out. And then I went short again when I saw it, wick up. I saw like that huge wick at like 10 a.m. I went short again. And the problem was like I did risk a lot, like for like my liking, the first trade. So my second trade, like I was like so hesitant. I was like,
Oh,
man,
tell
like,
me, tell me your position size.
all right, so I'm trading micro contracts. So I think the first trade was like I think 3 contracts. So I ended up losing like I think like $600, and I was like, crap, like that's not something like I want to like lose. So I risked more than what I could afford to lose, I guess. But and then like I went in again, like I said, so I lost 600, and then I went in again, and man, I just got this like fear. I was like, oh, if it goes up again, anything could happen. So I ended up like stopping myself out, which is my number one rule. It's like do not stop yourself out. I put that stop loss there for a reason. And I got stopped out again. Well, I stopped myself out. Like I literally cut bait, and guess what happened? Literally at 11:01, like I stopped myself out, and then it just dumped. I'm just
Mm.
like God. Like I guess like it's just. I mean, my problem right now is just the psychology of it. I feel like I back tested my strats, but just the psychology of holding a trade, and I don't know. I mean, these market conditions aren't the best right now, but I mean, I guess it's just my question would be like the psychology aspect of trading of that. What do you think, Michael?
One, you should be doing one micro.
One
We are
micro.
in we're in some serious. I'll be honest with you. This morning, that was a very difficult session for anyone that's less than 2 years. Less than 2 years consistently profitable. You had to really know what you're doing this morning. And on the heels of CPI, the data's bullshit as far as I'm concerned. I don't believe any of it. And we're in this really weird funk in the daily range. Like we explored it a little bit the other day, and then we dug right back up inside of it. So it doesn't have to move much to fuck you up. And when it lays down 1 second, 1 second ranges, and it's moving 20, 30, 40 handles, in one clip, bang, it don't take long for you to lose a lot of money, even if you're trading a couple micros. And that's what I'm trying to get at with the previous student. Where we're at right now, it's unprecedented. And you haven't even seen the volatility that's coming yet. Wait till they loosen this indice market up. Wait till that happens. You're going to see 2,000, 3,000 point moves, just like this. It's going to happen. And if you aren't careful, you're going to wreck yourself badly, real bad. So you have to roll it back, 1 micro, just focus on continuously trying to work towards getting better while the market's hard. When it loosens up, you'll be much better for it because you're going to feel like the moves are going to be stagnant. It isn't going to take that, it isn't going to be quick to get to your target, but you're going to be rewarded quickly because the market's going to be a lot more fluid. Right now, it's difficult. It's challenging. And this morning, you have to know some things. And that's why I wasn't chatting it up on this morning, because I knew the volatility was going to be high. And I said anything and I led someone to do something, they could get quickly hurt and bad. Look at what it was done. You talked about it. You were shorting it when it was running up. It was violent. Like it was boom, boom, boom. And you can get hurt fast with that. Like you can get really hurt. So my advice to you is when you take a loss, stop. Go into just tape reading. That's what you should be doing right now, all of you. If you take a loss for the day, no matter what size it is, this is a skill set you're going to practice, which is discipline, personal responsibility. Can you put the brakes on? 90% of the people can't. They can't stop themselves. Something just gets in their head. They just, I made money. It looks like it's going to keep doing some cool stuff. Let me get here. I'm going to trade some more. I'm not satisfied with whatever I made. Or I took a loss. I ain't going home with a losing trade. I'm going to make it back. You have to, these conditions right now, it's exactly why we implement stopping. One of the things I saw, and I think these times just maybe introduced it first, or that's the only one I'm familiar with, that you can lock yourself out. Once you did whatever you did for the day, you can lock yourself out so you can't even log back in to do any more trading. Am I correct? Is that what Top Step does, or am I thinking?
Yeah, no, Top Step does
Yeah,
it.
yeah.
So does Tradeovate. Tradeovate does it, and I think Tradeovate just started doing it as well. They've been claiming it, but locking themselves out.
That to me, that's one of the most beneficial things I've seen be implemented, because once you do it, it's not like you can say, well, let me go in there and change my mind about it. You're done. And that helps. That really helps with accountability, responsibility, ownership. And if you're not going to work on those skill sets, these environments that we're in right now, they're absolutely going to level you. You'll blow everything. You'll blow it. And the long and short of it is, by doing these things, it automatically, by default, builds up positive trade psychology. And you don't wrestle with the negativity. Like, I'm sure you're going to lay down tonight and lay in your bed and think to yourself, like, shit, I wish I wouldn't have done that second trade. The first one's bad enough, but I shouldn't have done the second one. And that's avoidable. The second trade shouldn't have happened today. And when you talk about how when you got stopped out on the second one, and you said, oh, and it really dumped, like you were talking to me like I never traded before, and guess what happened? You ain't gonna believe it.
Yeah.
So I've been there.
You won't believe what it did after.
Oh
Yeah,
my!
exactly,
It's like as
yeah.
soon as I closed myself out, it dumped, and it's just crazy. But no, you're right. Like I did stop. I was like, you know what? I turned off my computers. I went to the gym. I did my prayers because I'm a Christian, so I just started praying to God. I journal too, so I use Discord to journal. So it's like the most organized way of doing it. If you guys don't know, you guys should. I definitely recommend you guys use Discord to journal your progress because you
Yeah,
can
it's like
screenshot
a private
every time.
server for yourself. It's a very good way to stay organized. I definitely agree with you there. It's an excellent way for an individual to organize their trades.
Exactly. So that's what I did. Like I literally closed out, and I actually have been watching the market for no reason. I'm just home right now. I'm off because the thing is, I'm off one day this week, so it's like today is like my only day I could trade. So it's kind of like a little, it's a little tough, but we're really busy right now at work. So that's another reason why I was like, all right, you know what, it's time to turn it off. Next week is gonna have to be, I'm just gonna have to work, back test and continue my journey, but. Yeah, I mean, those are all great points, Michael. I've been really following your stuff for, many years now. So, I thank God every day for introducing me to your content. And I know that you know, you've got God's purpose on your mind and you're here to share it with us and it's a blessing. I really appreciate it, Michael.
Thank you very much for that.
Yeah,
Well,
so that's all for me.
well said, buddy. Well said. Very well said. Got to bring up my boy Lundo and got to see if we'll get Pippi up here too. I don't know if Pippi heard Pippi, go back and I know here's the thing. Pippi's busy working. I know what Pippi's doing right now, but Pippi, go back and watch today. It was 26, 27 minutes long, and you'll see someone answered someone's question on the YouTube. So anyway, I know you're here. That's awesome. Alex is here too. Took almost the same trade. Alex was very boisterous in wanting to take that short, and he took it all on his own. It was really good to see. But back to Lundo. Lundo, are you there, buddy?
Yo, Kit,
Yes, Lundo, high five, buddy.
how you doing? How you doing?
I'm doing great. Pretty please tell us your story.
Yes. Hi, Michael.
Hello, how are you?
So, my name's London. I've been trading since 2018. ICT concept since 2022 was the first mentorship that I watched.
When you first started trading, if you don't mind me asking, what did you start with? What asset class and what discipline of trading did you try to implement?
Like before you, like in 2018.
Yes, sir.
Yeah, so in 2018, I was kind of trading like mostly stocks and stock options. I was
Okay.
in a few groups like puts and calls, like zero DT, just gambling basically, with retail concepts, bull flag, bear flag, all that, you know.
My guy, bro. Nothing wrong with that.
But yeah, you got to start somewhere.
Yeah.
And then 2022, you started your YouTube mentorship. And ever since then, it's just been your content, all free content from YouTube and X. I've never been in the paid mentorship, but guys, the YouTube and the X, if you just follow that and dive deep, it's plenty.
Is it worth the money you spent on it?
Oh yeah, well worth. It's paid dividends.
There you go. So how do you trade now? What do you use from what was taught?
So I basically just use liquidity sweeps, order blocks, fair value gaps, inversion fair value gaps. I use it all. I'll post a few trades from today. I don't know if Kit can.
No. I don't want to know anything about trades. We're talking about theory, engagement, models, something like that. I try to avoid the student teacher relationship. Keep the money out of it. Keep that stuff. That's not. I don't want to hear about those things because it gets in my head and I start thinking about the first. I have a mantra I go through before I start teaching. Before I start talking, I'm going to say what I need to say, and what I'm saying. These are my words. These are my experiences, and I try to block out all of the people that send me their little screenshots and they say I made this much money or I did this much money and I did this. Thank you. This. I want to hear what you have to say, but just change the way you're describing it. Just say, look, this is one of the setups I was following along with because it just helps me stay grounded as an educator and it doesn't take me out of my focus.
Yes. Okay, Michael.
Thank you.
So as a protocol for like my most of my trading in terms of like day trading, I'm using the daily chart, the 1 hour chart, the 5 minute chart, and either the 1 minute chart or the 30-second chart.
Okay.
Kind of just whichever is more visibly clean in my eyes. Uh, but yeah, just the daily for like the overall broader market, the macro. The hourly is where most of the trade ideas come from. Let me silence my phone here. I don't know if y'all can hear that. But yeah, the hourly chart is where most of my trade ideas come from. So I'm just waiting for like liquidity sweeps to get a new dealing range. Uh, if we already have an established dealing range, I'm looking at premium discount, finding PD arrays, premium arrays if bearish, discount arrays if bullish, and then I go to a 5 minute chart and I wait for basically the 2022 model where I started,
Okay.
and then within that I also try to catch the last 5 minute sweep. If I'm expecting a reversal, I'll look for the last 5 minute sweep and then go down even deeper to like a 1 minute or 30 second and try to catch the move there. Basically, same thing, 2022 model.
What do you use for your targets? Like, what do you frame as your terminus for the end of your move that you're trading?
Yeah. So if we're taking like the external range or like we're a liquidity sweep and we're moving back into the dealing range, I'll just target equilibrium, or like if there's like a nice swing low there or something there, I'll target that. Basically just low hanging fruit for the first target, and then I'll just
Okay.
monitor it from there.
Good.
Lundo, do you mind telling ICT a little bit more about you, what you do outside of trading? Just, a little bit more about yourself.
Yeah.
I mean, you were highly technical, and I'm sure he very much values and appreciates. You definitely knew how to explain how you engage with price. That's for sure. Do you mind telling us a little bit about yourself?
Yeah. So, I've been trading. I mostly still trade on my phone. I know that's not a very popular thing to say, but I also own a plumbing company on this as well. So most of the time during the day, I'm not just glued to the charts. I kind of get it where I can.
My guy, blue collar, owns a plumbing company, trading from his phone. Michael, tell me that's a little high five here for whoever in the room trades on their phone. High five. I feel you. I love you. These concepts were tailored for you.
Yeah.
Yeah,
If
you
we
can
had cell
definitely
phones,
do
you
it.
could
Just
just
got
say
to be
LED.
precise.
ICT, the mobile edition.
Yeah. I would have done it too if I could have.
Swear, yeah, it's very surreal being on here with the ICT. I never thought I would get to
Yeah,
speak to you, sir.
I definitely know this is a dream come true for Lundo, and I know he's probably a little. He is saying he's a little at a loss for words, which that's why I don't mind interjecting and trying to add a little bit. I mean, Lundo, you telling your story or that you're a plumber, I think is very cool. That you're constantly on the go, mobily, and you're doing all of this on the phone while you're multitasking. That's pretty cool. And I will say, bringing up quickly, my boy Pippy B, right beside you, right beside Michael as well. Guy, he's busy living his life. He's a dad. He's busy working as a he does not a plumber. Pippi is works on cars, right? So he's a mechanic, and he works on he's a mechanic in a very busy garage in New York. So he deals with a lot of customers and a lot of cars and a lot of people all the time, and he's trading. So it's fun to talk to professionals and charter students that trade ICT concepts that are utilizing, the concepts while they're living their life. I like having folks like Lundo on and Pippi because I believe us as traders and as we grow, like the real life trader, I hope you're hustling and I hope you're working to get multiple avenues of income. And it's not just solely you arrived because you know how to trade, right? Like trading is an awesome way for you to build and grow everything else you want to do. And I think Michael's done a great job of helping you understand that. And what we're doing this year with the One Micro is pretty solid as far as a group effort and what you can do in the market.
How
Lundo.
long have you been? I'm sorry. I didn't
No,
mean
go ahead,
to.
jump.
How long have you been running your own plumbing business?
This is our second year,
Okay,
2026.
that's awesome. I have a couple cousins that have their own individual plumbing business. Anything I have at my homes that need to be done, I have them come and take care of it for me. But they came to me when they were younger, and they were like, "How do you live like you live? Like what do you do?" I say, "Well, you have to have an entrepreneurial spirit because being an employee doing a job for somebody else, it's fine for some people, but yeah, if you really want to find your own time and make your own schedule, eventually you're going to have to own your own business. But you'll work a lot in the beginning, but it won't feel like you're working because you're doing your own thing. Do you feel that way with your business?"
Yes, that's exactly how it feels. Like I always knew I wasn't gonna work for someone my whole life. I'm sure you felt the same way, but it just gets to a point where you just got to take that risk. I mean, in trading, start a business, whatever you got to do, just got to take the risk.
Apply ICT concepts to your plumbing business or your plumbing business to ICT concepts. How do you see parallels within how you do A versus how you do B?
That's a crazy question. I don't know.
Yeah, I don't even know how to.
Well, I mean,
That's
I'm kind of a crazy kind of guy, so I'm all
Yeah.
about those crazy kind of questions. So I don't mind having them.
I can't
Yeah.
relate it. I'd have to think.
That's
on
I know I put you on the spot, Lundo. So I'm a crazy kind of guy. I don't mind having that question. So that's cool. No big deal.
Having an entrepreneurial spirit, though, implementing a trading model, building a plan of action, what you do, you go through this process every single day. You don't deviate from it. It's the same thing like you would do when you get up. I guess you get your phone calls from the answering services. Look, I would like somebody to come out here and take care of my toilet or my something, my backflow's messed up, this, that, and the other thing. Something's wrong with my stuff. Come in here and put a water heater in here. Well, you know right away you're making $1,000 or more, right? I mean, that's what my cousins tell me all the time. He says, all I gotta do is do one hot water heater a week, and I'm done for the week. I'm good.
Yeah, water heater's a good call. Water heaters.
Do you do any commercial work or do you do all residential?
I do mostly residential now.
Okay.
Like mostly new construction and remodels. I don't do as much like as ICT saying like calling them out for like we'll do like a water heater or something, but we don't just like do many service calls is what we call it.
Yeah, you don't do. You're doing full installs and new builds, right?
Yeah. Exactly.
Right. That's right on. That's very cool. Very cool. So what I was thinking about.
Get to that. I'm sorry, kid.
No,
sorry.
No, I was going to say where I was asking that crazy question from this crazy kind of guy of how you would apply ICT concepts to your plumbing practice would be really looking at like the plans and specifications, the same way that you have a blueprint, the same way that you have architectural drawings, you have specific schematics, and they're actually to scale for you to build. And you know this because you have to cost. Not only do you have to cost the project, you have to build the project. You have to build the project by deploying the correct man hours. So you have to be able to assess the amount of man hours that you're going to need on the project based on the scope of work that you're going to be doing. All of that you're going to be able to assess through the scaled engineered drawings. If you look at how we learn schematics from ICT, for example, Core Content Month 12 or the Market Maker series, and you apply those schematics like an engineer or a construction worker would to a blueprint, you're able to apply the exact same concepts to create a financial reality, right? You're able to literally scale and engineer a financial drawing and engineer that into a real life decision making skill set. You feel me?
Yeah, you answered your own question.
I know, because I already know the answer because I'm a wild and crazy kind of guy. I'm a wild and crazy kind of guy. That's why I like to ask other people. Sorry.
Very nice. Very nice.
I mean, I've thought about this because I'm also I work in construction. Plumbing is one of the things I do. I do structural, I do electrical, I do civil, I do several forms of engineering and development, and I do it in the forms of hundreds of millions of dollars. for the state of Ohio and for private investment, private equity. That's how I've built my career outside of trading. Time and price, but within construction, project management, which is, again, a schedule. In these drawings that we're talking about, I fortunately was the person who hired the architect, who also put the bid out for the contractor to then perform the work for the owner. And I worked for the owner, so they had to represent me. Just like I'm an ICT rep here, I'm repping the owner over here of his concepts. Okay. I'm an owner rep. That's what I've done in my life. So I'm an owner representative. So I am representing the owner, who is Michael Huddleston. And I've done it my entire life. I was built for it. I was built for it, built to do this. And managing people and talking about concepts and actually building things. Software engineers, musicians, people in science. There's specific protocols. There's specific processes. A very good friend of mine who's a musician and also has a master's degree in chemistry reminded me of how similar the lab processes are within science as with ICT concepts and the schematics of what we learn and how we learn to trade. Wild stuff, right?
Yeah. Most of my higher tier students come from an entrepreneurial mindset. Either they developed it or they already had it. And the ones that don't, generally, they make the most common mistakes because, let's just be real, that no one really teaches us in school to be entrepreneurs. You're being trained to be a drone, to go out and work for other people and be part of the industrial complex. So, I mean, it's sad. I when I was younger, I was trying very hard to get into the education system, and I wanted to go around and just do like, when you go to school, you had like an assembly, and you go there and you listen to people talk about join the military, join this, join that, or do this or do that, or maybe you saw a magician do stuff. And I tried very hard to get into schools, even into colleges, and even with broker statements saying, look, this is what I would like to show them. This is an investment idea that maybe they could use this to kind of like offset some college tuition, because that way they can see something from it for themselves. They say, oh yeah, well, he's not teaching them to be an entrepreneur and not go to college, but this is a way to pay for that in a way. They were not interested at all. It was like, no, we can't have that. I'm like, what the hell? Like, why wouldn't you want this? So I don't know. It's always been a frustration on my part. And when I had my kids, when they were growing up, their friends would come over, to swim or hang out, whatever. And they're asking me, like, what do you do? I said, what you're seeing me do right here. This is what I do. And they're like, but what's your job? I said, I look at these charts and I make a decision about where it's going to go. And then I invest on the decision, on the outcome. And I run businesses and I have real estate and I have companies that I'm not going to talk about while I'm on here, but I'm constantly doing things and I don't want to be an employee. So their friends would be like, wow, if I were to ask you if you could tell me which one to pick to start from, what would it be? And I would like, I don't know. You got to go where your heart takes you. And if it's something like what led you personally to get into plumbing? Are you from a family of plumbers? Did you have a friend that had a business, or did you go to trade school and that was what you took up? Like, what got you into it?
It's kind of just finding whatever opportunity you have. I mean, I have a business partner as well, so it's not just me.
Okay.
He comes from a family of plumbers. I didn't necessarily, but we kind of just came up with a plan because so his dad's a plumber. He owns a company as well, but his dad's company mostly does out of state work, which I live in Alabama. Uh, his dad's company mostly does out of state work, and my uncle, uh, he remodels houses, he builds houses, and I knew that like once we got established, he would start giving us his work, and then his dad owns a company, but obviously they get calls to do work in Alabama as well. So knowing that I would get like most of my uncle's work, and he knew that any work that his dad got in state, which they don't do, we would get that work too. So we kind of just put it together, started a company, and we're still going strong now. So
Does your friend or partner, does he trade or has he any interest in doing it?
not a clue. He doesn't have a clue. I'll tell him what I'm doing, and it's like talking to. I mean, he has no idea.
So essentially, you do the business administration and he does the operations. And you came to the table with a pretty strong network and a savvy understanding of business administration. And he came from a family of plumbers and understood the operations and like the field site side.
Exactly. That's exactly.
Right on, bro. I could sense that. You're more the savvy business entrepreneur, and he was the more blue collar pipe fitter.
Yeah.
Now, I do have to get my hands dirty as a new company. It's not easy. But yeah, try to keep it that way.
But it's your company, so it doesn't feel like you're working for somebody else. And any extra hours, you're getting the benefit for it.
Yeah, exactly.
That's awesome. I love it.
Well, I'm glad I got to get on here and talk for a bit. Speak to you, Michael. That was awesome. I just want to say to anyone listening, like I never went through a paid mentorship. Everything I learned from ICT Concepts was for free on YouTube, for free on Twitter, X. So don't think just because you're not paying, there's no value in this. Like Michael doesn't have to give you anything, and still here he is showing up every day, giving you way more than he has to. Like I'm sure he doesn't have to be doing this. So take it while you can.
Yeah.
Thanks.
Appreciate that, man. It's nice meeting you.
Kit, we'll be in touch, I'm sure.
Bro, I want to give you a big hug, high five for sure, my man. I know this is a big deal to you. I know you're excited. I'm excited for you. And I just know it's nice. So you're going to remember this. I'm going to remember it with you. And it's cool, man. It's really cool.
Yes. Thank you, guys.
Have a good day, man.
It's my boy, Lundo 2K. In the trenches, lots of conversations after hours, little, analysis, kind of rabbit hole, ICT concept conversation. I love how the term by Michael was brought up of Easter egg, because I definitely think those within the community are shared as well. And I never had thought of it that way until he actually said that. And then I'm like, fuck. I've been giving out these Easter eggs, and I didn't know they were fucking for everyone else. I'm just here just like, here, Easter egg for you, Easter egg, you get an Easter egg, and you get an Easter egg. And Michael's like, bro, you fucking busted my balls here. Like, it's my mentorship here. It's like I left these here breadcrumbs for folks to find, and you're playing like the Oprah Winfrey game here. That's not what this is. But no, I catch it. Hey, I am very. I'm aware. I'll just say I caught it. I'm aware. No more. Let's stop with the Easter eggs, Kit. Let's let folks work and do what they need to do. Okay. And anyway, we're here to understand and hear your story and how you are doing with it. So, Alex, longtime listener, not a first time speaker. I want to bring him in because he was following the live stream with me, and he was already independently doing his own thing. And then he jumped in with ICT, and he was really kind of tapped in. Alex, you there, bro?
Yo, what's up? What's up?
Bro, great trade today on MNQ. I saw you doing you, bro. I saw you doing you.
It's all down to Michael, man.
Well, I appreciate he appreciates that you give him credit for the concepts, but that was you making the decision, right? So good on you. Good on you.
I mean, I know I saw that, happening, and I was like, okay, let me see what's going to happen, right?
You said real time in the comments. You were the very first person that was like, I'm short. First person. I mean, I'm short. I like shorts from here.
The level of Michael, you mentioned this morning. That's the level I have on my chart, right? So you literally give me the vision. Like I have your vision. I don't know. Like I feel like it's sometimes I don't want to say things, but I feel like I'm you.
That's good. That's intuitive, bro. That's you in touch with your intuition.
And I'm telling
that's
you because I was back in the days. I'm not sure. I'm telling you, Michael. I'm from Romania. I'm 26. Okay. Now right now I live in Switzerland and I have a car business. I have
Damn, you're in Switzerland now?
yeah, I live in
Michael,
Switzerland.
let
Yeah.
me tell you, this dude, he's been in Turkey, he's been in Italy, he's been like on Trader Roundup. This man, he has been traveling. He has been some places. And I mean, he's like, I'm in Turkey right now, and I'm from Romania. I mean, he's hustling. Good kudos to you, bro. I see you working. You're working.
Yeah. And yeah, I mean, first, I'm telling you, I'm not only on training. I have all stuff, a lot of going to do, but it's because having cars, all that dealing with this, like I need to give back the cars to the clients, and all this stuff. I own a M5 competition, so yeah, I mean, trading is helping me manage to pay the rent for the car, so it's helping me manage better because I have a lot of expenses. It was internet expensive, so also helping my family provide for the, and
Yeah.
it's hard in the streets, right? So especially in the context that's so expensive like this, right? And yeah, I mean, if it wasn't trading, I mean, trading and all I'm doing, you have two things that are working. I mean, I couldn't done it, but
Dude,
since I
you're
came
tapped
to
in,
you,
bro. You're tapped in. You
right?
are.
Since I came to know Michael, right? Because I was training support resistance. I came in this markets from 2020. I was a musician. I was making beats. I was making like hard dance music. I was like making that, but I have no revenue for that. I have no sponsorship. Nobody cared about me. So when I was 16 years old, I heard about trading, but I didn't get into it.
You do music too, right, Alex?
I was a producer. I was making beats like normal beats, and I was producing hard dance music, like hardstyle, like Dutch hardstyle, like progressive house stuff like that. But I was spending like hours on the projects. I said it's too much for me. I mean, nobody.
And now you're working on doing some business outside of the chart, outside of trading in Switzerland now, right?
Yeah, in Switzerland, I have you know, I have people that I go with, but only people that I know, right? I don't rent to people that because something can happen, right? But it's more a disciplined country, let's say, than other countries. Because I lived in Italy for like 10 years, right?
Yeah, no, you're hustling. You're hustling, bro, and you took a good trade today, and that's awesome.
Yeah, but Michael. I mean, when you mentioned that level, I say, oh, this he really knows where it's going. So yeah, I mean, it's awesome, right? If it wasn't for you, Michael, I wouldn't be who I am today. Because trading was very hard for me. I was say I'm never gonna be able to do this. But when I saw you, because I was in the moments, Michael, when I fought myself like I was psychologically down. This day I got Monday and Tuesday. I'm saying I got wrecked. I got wrecked with this market. Was very difficult to handle. So what the is going on? Am I wrong all the time? Because I can be wrong. No, the market is doing zigzag, up and down, up and down, up and down. I said, what the heck is going on here? Right? And said, and I'm following you and saying it's very difficult times right now. Okay, let me listen. Let me listen to what Michael says and see what's going on because I confused. I was confused, right? Probably because
Well,
right now I'm still young. Sometimes I don't.
you're young, but you're doing great, buddy. And I wanted you to come up because I thought you had a great trade, and I wanted to just say hi real quick. And I
Yes.
also want to give some other folks some opportunity. All right.
All right. All right. Okay. Thank you,
All
Mike,
right.
for everything. And
You're
yeah,
very welcome,
be
brother.
safe.
Kudos.
Good job today, man. I saw you. Decker, you're up, buddy.
Hey, hi. Can you hear me?
Yes, sir. You know the protocol, please.
Hello, everybody. Um, I am from Serbia, Central Europe, for the folks that don't know it. Very small and problematic country, but let's not go into it.
Yeah.
Um, yeah, so I'm a father of 3-year-old, and I first heard about ICT almost 2 years ago. It was April 2024. Basically, in 2017, I believe, I was working at the bookmakers, and that's when I first started, learning about, what a candle is and all those things. So I started with the major things that pop on YouTube. like trend lines, supply and demand, and all these things. And I was like, this is really exciting, And at some point, I was like, this shit doesn't work, And some things happen in the market, and I was like, I need to understand why this happens. I would just see a spike. I used to try to trade gold, by the way, and I was like, what the hell is this? And basically, um, I gave up after some time. I completely forgot about trading. I was like, I don't understand this thing. And
How old are you again, bro?
36.
You're 36. You have a 3-year-old daughter, you said?
Uh, it's a boy. Yeah.
Oh, boy. I'm sorry. My bad. 36 with a 3-year-old boy. I like the numbers. And what do we got going on?
Yeah, basically, so I a friend of mine introduced me, with ICT concepts. Before that, like I said, I only knew about trend lines and supply and demand and those kind of things. And when I first heard ICT talking about, I can't really remember the first video I stumbled upon, but I was like, this guy is on to something. And then when I went to his channel on YouTube, I was like, damn, like all these videos, like I don't know, like 600 at a time. And most of them are like 1 hour plus long. So basically, I ended up, like work, son, family, duties that you have to do. And I spent from April 2024 to probably like April 2025, I spent like each night, like 2 hours, I would be on YouTube watching videos, taking notes and all that, where I came to the point I said to myself, I know too much. This is just too much information. I can't really like track everything. And so 2023 mentorship started, when introducing first presented fair value gap, um, opening range gap, and those things. And I was really happy to see it live, to watch the price and watch the videos at the time, to hear about ICT talking about stuff. And it was really good. But at some point later on, so basically, like a few months ago, I decided I'm not gonna trade the 9:30 open. I only want to do macros. There's this sentence when ICT said, I can trade every hour because of the macros. I mean, I'm paraphrasing. And this really stuck to my head, like, is it really possible to be able to trade each hour to each 20 minutes interval? So I was just studying, and I mean, honestly, I was into Forex, I was into NASDAQ and all that. And I tried to kind of teach myself how to be able to trade at any time, because, I wake up like, 7 a.m., maybe 8 a.m. Silver bullet in London would be like 9 a.m. my time. So basically, I can cover everything except Asia. And yeah, basically, so I was all over the place, trying Euro USD, GBP USD, NASDAQ, gold still. So I first gave up on gold because, I thought to myself, this is too much volatile. and it kind of moves differently. I didn't really understand why, but you know.
Hey, Decker, did you have a question?
Yeah, sorry.
I mean,
Sorry.
very long, drawn out. Can we get to the point here, buddy? I love you. Come on.
Sure. Okay, sorry.
All right, please. I appreciate all of this.
My point, I came up with my own system, but like I said, I'm only trading macros. And today at 1050 macro, my draw was lower. The equal lows from yesterday, 24, it doesn't matter. So basically, we had a breaker block, we had an inversion gap.
So you're going to ask a technical question. You've already dropped a picture because you know the protocol. Is that what all of this is?
Which picture?
You have a technical question?
Yeah.
And you've already included a picture in the comments, correct? Because you know, understand the protocol to technical questions includes a picture.
Oh, sorry, I didn't know that. I can.
Okay, well, you need to understand. We've said it before, and it's a lot of time.
Yeah. Okay.
Try your question. See what you got.
Please.
Okay, so I'm uploading the image right now. Here it is. So the purple one is the CB. So basically, the price went over it and then went back again below it, while we had 5-minute CB that we traded into. So I was expecting this CB to be respected. I had my stop a little on the swing high, but I manually closed the trade because this CB was inverted. So what are the times that this is allowed? I know the wicks are allowed to do the damage, but when we have the body close above it, what happens?
I'm looking for this chart you're talking about, and I don't see it.
He's referring, I think, to 1104 candle where it closes above on the 1 minute chart. It closes above the 1102 SIBI. I don't know if you have the charts open, Michael, but I think that's where he's at.
MNQ.
MNQ.
Yes, MNQ.
1 minute and 11. 2 minutes after 11.
Yes.
Are you asking specifically about the 4-minute candle?
It's a 1 minute CB 1102.
Right. I got that, but what about it? Are you asking?
I'm not sure. So it hit the first presented fair value gap, created SMT at the high, and then went lower, but it went closed the candle above that CB.
The fourth minute after 11, 1 minute candle.
Exactly. Yeah. So I'm not.
And your concern is what specifically? Is it because the body was above that high of the fair value gap?
I am concerned why it closed above. Why didn't it, for example, just wick higher and then, close somewhere in the CB?
Because what you're looking at there is it's completely permissible for that to happen, because the fair value gap on the 2nd minute after 11, so 1102, that is your fair value gap candle. But you have to, where do you anchor your stop loss according to fair value gap?
My stop loss initially was at 25,090. So the midpoint of, the consequent encroachment of the first presented fair value gap.
Well, the fair value gap pattern in itself, you would have used just simply the high of 1 minute after 11 plus 1 tick. So it going up there like that, that's fine. It may make you nervous, but the only thing it's doing is it's trading into the mean threshold of the Make sure I'm telling you the right time here. The 11 o'clock 1 minute candle, the closed candle, that's a bearish order block.
Yeah, yeah.
So if you split that range in half, all it did was it encroached upon that mean threshold, but it didn't breach it. So everything here is fine. It's not a problem, but it's something you're going to have to get used to seeing sometimes.
Yeah,
Especially Decker on a 1 minute chart. You can't apply high time frame rules to a 1 minute chart.
Okay.
I appreciate you wanting the level of precision and the process. You're applying a high time frame. You're just simply got to look at the OB that Michael's referencing. The OB he's referencing, the wick doesn't even hit mean threshold, and the body is less than the 30%. Correct. So notice the wick doesn't hit the 50% of the OB that he's referred to, and then the closure of the body is at the specified 33 to 25% or lower. So that's already showing weakness, but it's higher than the FEG that you're looking at, but it's only a 1 minute chart, mate.
Yeah.
In addition to, if you look at your 9:58 a.m.
Sorry,
1 minute candle,
9:50, right?
9:58,
9:50.
9:58 a.m. New York local time.
Yeah.
That's a buy side balance, sell side efficiency. If you measure that and grade it, you'll see that your candle concern simply just goes up to consequent encroachment of that buy side balance, sell side efficiency, and it's going to act as an inversion fair value gap. So everything that you're questioning is all part of a simple, normal, everyday occurrence with order flow.
Okay, I guess I just need to train my eyes a little bit more.
That's all it is. You're just going to spend more time doing it, and you'll get comfortable with it.
Ooh, see that? That's awesome. So actually what he's really telling you, Decker, is probably the lower time frame will get you trained to seeing this a little bit more, and you need to be utilizing what you're seeing on the high time frame, being able to real time trying to assess order block theory and where and how you're used to seeing it on a slightly higher time frame, where and how indeed it is real time occurring on this lower time frame. You see what I'm saying? Because you probably weren't visualizing that upper that bearish that down close as an OB, were you? And then it passing and wicking on mean threshold and then closing just below. That's literally order block theory, but we're applying it on the much lower time frame, and that's difficult very quickly, right? Very difficult. Very difficult.
Yeah, I mean, I honestly, like I said, I realized I learned so much about everything that I had to throw some stuff away. And my main focus is on the FPGs and, when they get inverted.
Are you how much have you studied month 4, brother? Are you all over month 4?
Yeah, I went through it. Yeah.
I mean, order block theory is so fundamental to everything you're doing within looking at and reading a chart, especially now with the supercharging of understanding the PD array matrix. I mean, you really have a matrix to be applying core content month 4 too. So it's even more applicable that you go back and watch and rewatch these arrays, because as they're printing on key levels, it will help you make better decisions. Fractally, this is a fractal concept. It works on the low time frame and beyond.
Yeah, I understand.
I know you do, brother. I know you do.
Yeah, I just wanted to say thank you, Michael, for spending your time, which is precious, to teach us. And I'm just following, and that's it. Thank you very much.
Thank you very much, man.
I got my boy MB here who's been like spamming the comments with questions, and he's got some good questions on today's top. Well, he's got a lot. So MB, jump in here, buddy. I was not going to forget about you. I see how excited you are, and hey, the squeaky wheel gets what is that? The squeaky wheel gets oiled. So there you go, buddy.
Thank you for letting me speak. So I'm from the UK. I'm 17. I'm currently in college and working.
Hello?
Did we lose him?
I can't hear anything.
Yeah, well, the young man coming in might have been he probably had, X's undefeated, so we'll get back to him because we all know, I mean, Michael as well as I do, he was very excited to communicate. Let's get him back up here. I know you are. Come on, buddy. It's all good. Get you back up here. You got a speaker tag up there for you. No big deal. Momentarily. Eden, calm down, buddy. Calm down. I see you. One at a time. We're patiently waiting, trying to get our boy back up here. He was here. He was talking. Tech difficulties, they happen. Hey, there he is, buddy.
Oh, there we go.
All right. You're set up now, I hope.
Yeah, there we go.
I know it's horrible. It doesn't, isn't it the worst feeling when that happens?
I know.
It's like devastating. You're like, oh my God, what's going on with my phone? I know.
Nearly about to throw it.
I know.
What bit did it start cutting out at? I'm not quite sure what bit.
Pretty much start over if you don't mind, brother.
Right,
if you don't mind.
I'm from the UK. I'm 17, and I do half college, 3 days a week at college, and 2 days a week of work. So it's quite hard to pull trading into that because I'm quite busy. But most of the times I trade New York PM session because that's at 7:30 at my time, so it's after work and after college. But normally it's quite slower. But I just had a few questions about the new PD array that we learnt about today. Well, I got them wrote down. I'm just going to find them. So the first one was with the event horizon, can you use that between the new week opening gaps and new day opening gaps?
Yes, sir.
Oh, perfect. And then
You can use them between any inefficiency, like a opening gap, opening gap, opening range gaps. You can use them between pools of liquidity, as I was illustrating today. And I just actually looked at NQ. It actually went down to my other target, it went actually lower than that. So I'm actually kind of happy to see it run down there. I digress, but I just happened to see it, and it went down to the event horizon I annotated in the
I
video
see that
today.
on the chart.
Yeah, and then it created an order block. The open of that order block on a 1 minute chart lays directly on top of the event horizon at 6:25 p.m.
So can that act as like a quadrant level? So if a PD array is sitting on top of event horizon, would that be classed as
Yep.
a good PD array to use?
Yep. And the wick also, the very next candle is 626. See that discount wick? Grade that, and you'll see it's laying on top of an octant that agrees with that event horizon. And then go inside the candlestick on the lower time frames, 5 second, 15 second, on the 20, what is that, the 26th? I'm trying to do this from my phone. Yeah, the 27th, 627, that candlestick. If you look inside that with a 5-15 second time frame, you'll see that will give you a PD array around the event horizon at 24,873 quarter. And you have the order block. You have three things there. Wow. And then it came right back up into it, consequent encroachment of that discount wick, and then dumped. Look at that. That's beautiful. See that?
I'm currently not in front of the charts because it's.
I'm sorry.
It's 11
I'm
o'clock in
geeking out.
the UK.
Yeah, I'm sorry.
I'm just writing it down though, so I can study it tomorrow.
I'll probably throw something together on a chart and throw it on X when we're done with this.
My second question was, with that PD array, is it only inside the 2 hour lunch window?
Yes, it's a very specific thing just for New York launch window.
So just before 1:30 p.m.
Yes.
Oh, perfect. Thank you.
You're very
That's all
welcome.
the questions.
MB excited with the questions. I like seeing it. He was all over the place with them, boy. But 17 and boisterous, that's for sure. We
Look at
got.
NQ go. Look at that.
I
You guys
know.
watching it?
I am. Yes.
Beautiful. Beautiful run. Look at that. I could have been making grocery money right now.
I know. I know. I know. It's as it's lined up, my friend. It's as you've noted, as it's been discussed. Wow.
Crude
I
oil
think they're all
also
listening. They're children.
releasing.
That's the fun. I just enjoy that. I mean, it's talked about. It's there, folks that don't know that. It's go back, look, and then it's just fun. It's fun because we talk about it before it happens. Before it
Mhm.
happens. So that's fun. Lundo Pippi. He talked about your rate today. Are you there, Pippi? I know Pippi's getting off work. I would presume maybe has a chance to take a speaker tag. Pipster.
Hey, Kit, 7:30 is my exit time.
Yes,
Okay.
sir. Thank you. Thank you for letting me know that, and I like that time. Mauricio, 7:30. We got 20 minutes. Mauricio, heard from Decker. You guys hear me all right?
I hear you, but I don't hear anybody else.
Yeah. Okay. Mauricio might not hear me. Pippi might not. Alex hears me. Okay. Yeah, we can hear you, buddy.
Hey, good afternoon.
Good afternoon.
Just the question that I had for Michael. Good afternoon. It's in
Hello, how are you?
regards the good. With the current level of volatility that we having with these markets and seeing that the PD arrays are getting, basically filled to the extent, to the maximum extent, and with the videos that I've seen that you've been posted lately, I'm seeing that you're using like a 30-point stop loss on your trades, if I'm not mistaken. So the question is, we should try to um, lower our leverage to allow a bigger stop loss. Because I know
Yes.
that we used to have like 20-point stop loss on NQ and 5 on ES.
Yes.
So
Yeah, I'm trying to show examples of the lowest leverage. I'm trying to show larger than I normally would stop losses because everybody has this opinion that they're not really good at trading unless the stop loss is too small. And in this environment, even myself, it's very, very difficult. Unless I'm in these really ultra sub 1 minute time frames, my stops aren't as tight as they used to be. I'm a little bit more forgiving. I'm allowing for a little bit more in terms of drawdown if it pops in. I trust what I'm looking for, but I might catch some heat on it because of it's just a lot of back and forth delivery, and hopefully I'm trying to inspire this with everyone else so that way they can think, well, it's not that big of a deal if ICT's doing it and he's catching it. So why am I so hard on myself trying to get like a 12 handle stop loss? Why should I stress myself over that? Maybe just widen up and lower my leverage and I'll catch more trades.
this is exactly what I was talking to Keith actually this morning, and just to try to build a position where we absolutely know that we're completely validated because, for example, the short of this morning, we have those equal lows that was the prime. We knew that was a draw, but we also knew that part of my French fuckery was gonna happen, and obviously going with NQ or two NQs.
I'm not catching anything, Kit. I can't hear anything you're saying.
Yeah. Hey, Mauricio, you're breaking up on us a bit, buddy. I mean, I heard what he was just kind of trying to. I mean, you're just pretty much going over play by play of what that looks like, right, buddy? I mean, he's definitely agreeing with you, and you're mentioning the conversation that you and I had earlier today, right? And I'm repeating this Mauricio because Michael couldn't hear you, so I'm just kind of trying to play telegraph here. Okay.
Thank you.
Yes. We're going to keep the conversation going. We got a few more minutes. I know there's a few more folks here that would love to add to the conversation. Dan had some decent questions. Dana, you there? Dan?
Yes, can you hear me okay?
Yes, we can. Pretty please follow protocol.
Hello. So name's Dan from the UK, 22 years old. Been following ICT for a good 3 years now, essentially. Been through all of the rabbit holes, but I've finally just established myself with order pairing. I'm 50K funded recently and it's looking to scale up as of now. But my main question for Michael was in regards to order pairing. This wasn't too much content on it. So my style is I only trade London session, looking for engineered liquidity in the form of Judas swing formation, with the anticipation this will create the high or low of the day. And I'm typically looking for a high probability 15-minute order block above or below hold 4-hour highs and lows within a premium discount level of the previous day's range after a daily bias and weekly draw liquidity has been established. I just wanted to ask if you think that London is optimal kill zone for this type of style.
Yeah, actually, every session is. I mean, you can find that setup. You may have to scale down in the time frames, but using what you're using, ideal in London, yes.
Okay, perfect. Is there anything would you say in regards to New York time, or because I did have one
Well,
today?
if you
I
have a
posted that.
if you have a high impact news driver around 8:30 or 10 o'clock, that criteria will be there as well. But if you don't have any news, then it won't usually show up.
I just really struggled holding it like through today, as you can see, one I posted in the chat through CPI. So I moved my stops like into profit. So I got in literally as soon as we swept below that 4-hour low from Asia, and I basically bottom ticked the low of the daily range. But
Good for you.
I didn't get what I wanted to actually get, like my initial draw on liquidity, because I moved my stops into profit too much. I'm really struggling with that side of things, to be honest. Even though I know where it's going to draw towards, what I don't 100% know, but I'm confident of where it was going to draw to on this day because we had engineered liquidity on the 4-hour time frame. I like the Judas swing formation, but you know, because of CPI, I just found it a bit hard to actually hold it throughout the trade, throughout the whole day.
The willingness to hold on to a position in this environment is going to require a little bit more discomfort. That means letting your stop stay out of profit range a little bit longer, and then only just trimming costs and maybe a little bit of pocket change after that. There's so much back and forth in trading inside the range, and they're having deep retracements, then coming back one more time. It's very, very challenging right now. So the only thing I tell everybody that's asking that in the comment section, or if they send something like that to me in X, they start dogpiling up. They're all having the same. It's not just you feeling that. A lot of other traders are feeling that same thing. And if you look at what I'm doing, I'm not strangling my position. Like I'm not bringing my stop loss in real tight. I want to have a little bit of a forgiveness. And I would have had the whole range today if I wouldn't have had to break away and go take care of an errand. You saw where my stop loss was. That's way up there. And that normally wouldn't be like that if we weren't in this kind of condition. I would have been in there below Tuesday's regular trading hours opening range gap. I would have had it much, much lower. But I have to be more forgiving with the price action that we're in because of the climate.
Yeah, 100% agree. Obviously, having that space for the stop loss is so important for my style as well. But would you suggest, like, in regards to using a previous day's range as my premium and discount levels, would you say that that's like a powerful sort of concept to use in terms of where I'm getting my order blocks from in premium and discount levels?
Sure. Yeah, you would always consider the previous day's range, but just know that because the candlesticks today are sharing yesterday's candlesticks range predominantly, the entire range usually, you got to be careful because like order blocks will get ran over top of. They'll just run right over top of them, and they're running for liquidity. Is what they're looking for. So if you study what these price runs have been doing, they're running short-term little highs and short-term little lows. Inefficiencies they're drawn to, that's fine. Order blocks, they're just simply running over top of that and going for the wick highs and the wick lows. So everything right now is about the sweeping up liquidity. So that's why I'm not really spending too much time on order blocks, because I've been noticing it. So I'm going to where it's visually represented by having the inefficiencies and then using one PD array, which is the opening range gap.
Okay, perfect. No, I do understand that. Obviously, I know there was one TikTok video I think I saw you going over it. Someone clipped it. I think it was ICT Gems, I think his name was. But he was just saying, use like from the wick high to the opening price. I always look for that order block that's obviously had previous respect from that area. And it's just resting below a 4-hour low in a discounted level when I'm bullish for the day. I think that's what I'm really trying to look for. Like you said, obviously inefficiencies are important as well. But would you say my model, just in terms of having just order blocks, is okay? Or would you say to start maybe incorporating inefficiencies as well as order blocks in discount levels or premium?
Yeah, I wouldn't say abandon the model. I'm just saying that you're going to have to be a little bit more forgiving and maybe go one trade a day. And if you get it, stop. If you take a loss, don't be in a rush to get back in and do it again.
Yeah.
Hopefully, we move after next week. We move out of this range a little bit more.
Yeah.
Either I want it to reverse and make a higher high on the daily, or it needs to come out of this range to the downside strong. Either one, I'm okay with it. Either one. But I think that won't happen until we get on the other side of option expiration.
I agree. Perfect. Well, that's basically everything. Obviously, appreciate everything throughout these years. It's been a long journey getting here, but yeah, I appreciate everything that you've done for your community and for myself. It's been a great journey so far.
You're quite welcome. Thank you.
Thank you very much.
With order blocks, if I insist on trading order blocks and order blocks are getting ran through, would it be indicative that I just not go to a higher time frame trading that order block then, Michael?
That would be one way of going around it.
Okay.
But if you're trading intraday, you're going to catch a
I
loss.
love order blocks. If order blocks getting ran through, I'm just going to go to a higher time frame and I'm going to refractalize that. I'm going to readdress that fractal through how we understand it in a higher time frame order block. I don't know. I was asking Michael because I thought it was a great question. That was the thought that crossed my mind. Lundo, did you have a thought on that? It's technical, but I like Lundo's thoughts and 2 cents.
Yes, I had a question that kind of piggybacks off Dan's question.
Yeah, jump in here, buddy.
So the rejection block. When do you anticipate it uses the rejection block instead of the order block?
Well, I will enter on Turtle Soup trade setups about 75% of the time with a rejection price at rejection block's price. I'll wait for it to spike up to it, touch it, or just be beneath it. And if it gets just above it a little bit more, I'll quickly wait for that. I'll use it for exits as a target. But I have to have a strong opinion about it moving back into a range that it just left.
Okay. And also on rejection blocks, just one more question.
Sure.
With the rejection block, is it permitted to wick above the high of that candle, or below the low if it's the other way around?
Paint a scenario for me. Like, tell me, like, at 10 o'clock in the morning, it creates a rejection block. And
Do you have your chart in front of you by chance?
Give me a time frame.
The 5-minute time frame.
Market.
It's going to be comparable between like NQ and ES, but on NQ it uses the order block at the order block.
Are you looking at the mini or the micro contract?
I'm looking at the main contract.
So NQ H2026 on a 5-minute.
Yes, at 5:55 a.m. I was framing this as an order block in my analysis.
5:55. Bear with me 1 second, okay? Let me get to that candle.
5-minute chart.
Okay, down close candle. Go ahead.
So yeah, the 555 candle, I was framing that as an order block post, like in my analysis as CPI unfolded. And at
Okay.
8:45 a.m., we tapped into that candle. Uh, Now on ES, it it I think used it as a rejection block, the same candle, 5 minute chart on ES. But the wicks went below it, creating an SMT. I don't know if you have any input on that.
Well, if you were trading ES, and I haven't toggled to that one, but if it went through the candlestick, then you could do a re-entry at the opening price. Did the same candlestick at 555 have a down close on ES as
Yes,
well?
it did. It
Okay.
did. Yes.
Re-entry would be permitted by simply just getting long at a buy above, depending on what you're looking for the buy stop. You would use a buy stop to enter on the ES if it went through that candlestick, but it supports it as an SMT divergence between NQ and ES. You could do turtle soup entry, but using buy stop at the 555's opening price. So you're going to buy strength one tick above that, and the stop will be the low of the candlestick.
So you're waiting for it for price to show that it's willing to come back above before you enter.
Yeah, because you're
Okay.
seeing the opposite or the reluctance of NQ to make that lower low. So you're being validated with SMT, but you're going to allow price to force you into it by going back above the opening price, which is essentially doing what? It validates the order block again.
Yes. Okay. Makes perfect sense. Thank you.
You're welcome. Good question.
Advanced order block theory here at Trader Roundup. ICT follow through. My boy Lundo coming in, swinging like I thought he would. Dan coming in, swinging like I thought he would. Great questions, guys. Pippy B, are you there, buddy? I want to come. If I can close up with you, that'd be great.
Yeah, actually, I'm here, but I lost my train of thought with the question that I wanted to ask. Right?
I'm
Okay,
I had
sorry,
Hey,
a
bro.
that's
I'm
re-
never
sorry.
happened to me ever, ever.
right. I had a really tough day at work. I couldn't figure out this car, and yeah, it was a tough day. So I'm kind of all over the place.
It's
I
okay.
definitely had a question though. When it comes back, I guess I'll catch you next time with it. It'll definitely come back to me. It was more of a technical question.
It's fair, dude. We all get it. That's all I'll say. We get it.
Oh, you know what? I do have a question, actually. I do have a question. So there's somebody I know, right? She's a female, and like I've been talking to her for a while, trading related, right?
You
And
want my
she trades your,
playlists?
excuse me?
You want my playlists?
Ah, damn. Yo, what are you, a psychic? What are you, a psychic?
How do you know, huh?
That's crazy. But the thing is, I kind of know how to navigate, the order of operation, but she's getting a little confused with the newer content. Now, again, I'm not caught up all the way on the new content, right? It's kind of hard for
Dude,
me
you work
to,
full time. We understand. No one's breaking your balls. We understand.
right. So for her, she's watching the new content, and according to her, she's saying that you're saying to use this content now and then go backwards. But then
I have said that.
now in prior mentorships, you say start from the beginning to go forward. So she's having a little disconnect
Hmm.
because she's not through all the content anyway, right? Like she went through core content, she went through 2022, um, maybe a little bit of 2023, and then I think it was a little disconnect like 2024-ish. Now she's back on the new stuff, and what she's hearing now, it's like a conflict of interest compared to what she was dealing with before, and it's kind of clashing for her. So is there anything like you could help out along that realm? Because I know other people go through this too, right? Like if they haven't grasped the concepts, to their liking and stuff that actually resonates with them, right? Because it is a lot of content, it is a lot of material, right? So it can be a little difficult how to navigate it. And I know you do have a video, like the order of operations, but the newer content is kind of conflicting with with the order of operations. So if there's anything you could
The
speak
next
on
time you
about
sit
that.
with her, explain to
Mm-hmm.
her that what I'm doing this year is there's a lot of people that's been with me for a long time. And some of them had made mistakes about trying to trade larger leverage, trying to do too many copy account pursuits, and just that I think the leverage scares them and it causes them to collapse and not really be able to focus. And I'm trying to remind everybody, because everything's so expensive, that I will come out here and I'll just trade a micro or two. And I'll spend the majority of the year doing that because I want people to relax about the, it's not sexy. But if I'm out here doing it and I'm showing consistency, couple $100 a day, couple hundred, that stuff adds up. And I'm removing all the questions about, can this be done? Can he really do it? Does this stuff really work? All these things don't, uh, they don't clash when you look at it in that regard. And for people that's been with me for a while, they're getting treated with things that they wanted to learn behind the paywall. And I'm bringing it out here now because I'm just willing to do it. If she's struggling for just give me a playlist that I can go with and it's going to be right in the right order, it's Model 2022 or Mentorship 2022. If she just lives there and just watch the stuff, because I'm not really making very, very long videos. I've had a few of them this year, but I'm trying to keep them succinct and small because I want the translation aspect on YouTube for the people around the world that don't understand English. They can just listen to me in their own vernacular and language. This is just a way of reinforcing and showing, wow, this is what's possible. Like, this is what's possible. So it's kind of like an encouragement. Once you know what you're doing, you don't have to have a big account to start growing it. You can do very well with just one micro and never go beyond that. So it's answering several things. A lot of people that first come here, they're doubting me because they hear all the bullshit. I'm a fraud, I'm a scammer, I won't win Robin's Cup, I did a paid mentorship, I'm selling courses, I'm going to write a book, but I'm teaching everything here, so that way you guys don't have to buy the book. But the point is having this encouragement by seeing it being done and not having very, very large leverage where people can look at it and say, well, yeah, that's a lot of money. It's not within the realm of realistic for most people. If I get out here and I start trading 15 contracts, building up, pyramiding it up, and they see the end balances of every one of these trades, it's like, wow, it's neat to look at, but it's probably fake, and I couldn't do it anyway. So therefore, it doesn't have the same resonation within them as a viewer. It doesn't resonate with them. Versus one micro contract, it's within the realm of capability for the average person. It's not over leveraging because you can't get anything less than. And I'm doing something that's very, very systematic. And she can see real examples of that, not using a lot of money. And what that does over a short period of time, it grows. Like, it grows. And it's what many people have already asked for. But if she's brand new, it's going to seem like it's too much because I'm going into details about things that aren't being taught this year. It's already been taught in previous mentorships. So to remove all that, just take her to 2022, whatever the 40-some playlist video list is, and that's good enough. And then once she tackles that, then she can spend whatever time she wants to do doing anything else.
Okay. All right. That works. That works because she's familiar with 2022.
Did she
and
complete it?
Yeah, she completed it, and there was a prerequisite of before 2022, which she already went through, right?
Put her through 2016, 2017. Let her go through core content.
I mean, in my belief, this year and the fundamental, even through, like, if you look at Trader Roundup, you take core content and you take 2026, because what Michael is doing right now with what he's already listed within the schematic of month 8. Month 8 has 8 episodes. It's dealing when not to trade, you're mapping out highs and lows. There's the intra-day protraction, which we talk about how to capture 70% of a range. If that's the daily range, weekly range, the session range, that is the schematic of a protraction or a delayed protraction. Again, that's outlined in High Probability Trading Core Content Month 8. There's 8 episodes. Your mentor is born on 8/8. Okay, so that's the thing. Okay, 8 episodes, month 8. Then what you're learning is the PD array matrix. That comes from month 4, which is half of 8. Okay, it's half of 8. You want to go to 4. So 4 is going to give you a plethora of. Sorry, my security gate is beeping. So I'm letting someone out. But the month 4 is going to be an application of the PD array matrix, and you're going to want to learn month 4 so that you can actually apply 8 and 4 to when you're going to month 12. You got to go to month 12 because month 12 is what you're doing all the time. You have to fractalize where you're at within the week. You have to understand every single day you have a different PD array in front of you, and not just talking about order blocks. You're dealing with different ranges. You're going to have monthly arrays, weekly arrays, daily arrays, and you're going to have highs and lows. And you need to watch and go back and watch when we talk about core content. If I could go back in time and when I was 20. So that is the supplemental information, the must-see ICT that complements core content. You heard it here first. So the 2 series, if I could go back in time, talk about the DWMs, your daily, weekly, and monthly arrays, the alpha and the omega of core content month 4. Core content month 4 is providing you the breadth of a candle in understanding order block theory. And you need to understand that because fractally, that's what it is. So you have 8 and you have 4 and you also have 12. So 4 and 8 make 12. So I really like where we're at on our numbers. And then 1 is your constant application of the market, OHLC. They'll never change the algorithm. OHLC never goes away. It will always have an open. You'll always have a close. You'll never, ever, ever not be able to trade the algorithm and the way you have learned how to trade the algorithm through Michael because of OHLC, because of the elements of a trade setup and consolidation and expansion. And then you have a kill zone and you have a macro and you have to align your PD array matrix within a specific kill zone for your schematic model that you're going to take and pull from 8 that you are going to apply through 12. So again, very, very simple distilled. 5, guess what? It's lovely. IPTA, seasonality. It's great. We're here with a sense of urgency. You can study that on your own time. On my time, you're going to focus on 1, 4, 8, and 12. And I explained very clearly why. And Michael understands that I'm saying that with love, succinctly, because we want to get people on the same page of the foundation. And there's a lot more. 7 is great. 6 is great. I'm not saying don't watch those. I'm not saying don't watch the charter price action models. Understanding market maker models, the market maker series is again a schematic. You understanding how the market moves as a blueprint and how that blueprint has to become what you become, someone that knows how to maneuver. You're a financial engineer at the end of this. And if you understand what engineering is and how your ability to scale these things into your reality is what we're doing here. It's what we're doing. It's understanding the charts and applying them to your life and you being able to apply your best self to the chart. And if you can't apply your best self to the chart, then you were never meant to be here in the first place. So get the fuck on. If you're here to learn, not what's the best investment strategy because I have hundreds and thousands of dollars, Kit, and I really want to understand what's going on this year. Where are you guys postulating that price is going to go with this investment strategy of mine? Well, get the fuck on, because that's not what this is, okay? We're in education, and we're here to help people that want to learn. You and your investment strategy can get the fuck on because we're not talking to you. I just figured I had to say that. Anyway, Michael, we're at a point of closure. 7:39. Anything you'd like to add as we close? I know you got to go, mate.
Yep, I just had a wonderful time hanging out with everybody. Great conversation, and have a pleasant evening.
See you guys next time. Peace.
Bye, guys.